Hi guys. Today we will analyze Whirlpool stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Whirlpool's overall performance in the market is below average. Also recent evolutions are not positive. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Support levels are around $185 and $162. Next support levels are around $140 and $118. Resistance levels are around $205 and $218. The next resistance level is around $232. In the last month the stock has been trading between $183 and $210 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.8 million. It's not a very liquid stock. The stock has been in downward trend since May 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 1% per year, for last 5 years. We see that the average profit margin of the stock has been around 4% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 14% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Whirlpool Company: bad, average, and good. First scenario. Whirlpool will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 1%. Future profit margin would be low, 4%. Future free cash flow to net income rate would be low, 30%. In this case, the fair value of the stock today would be $70. Second scenario. Whirlpool will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 5%. Future free cash flow to net income rate would be average, 40%. In this case, the fair value of the stock today would be $114. Third scenario. Whirlpool will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 6%. Future free cash flow to net income rate would be high, 50%. In this case, the fair value of the stock today would be $171. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 28.36. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Whirlpool, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 7. Again, I will use 3 different scenarios for Whirlpool Company: bad, average, and good. First scenario. Whirlpool will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 1%. Future P/E would be low, 7. In this case, the fair value of the stock today would be $78. Second scenario. Whirlpool will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future PE would be average, 9. In this case, the fair value of the stock today would be $110. Third scenario. Whirlpool will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 11. In this case, the fair value of the stock today would be $147. As you can see, today the stock is overvalued, $195, even if we expect the company's high performance in future. Whirlpool is expected to show a very small growth in revenue. In the coming 5 years, the revenue will grow only by 3% yearly. And the stock is currently overpriced. The stock has been in downward trend since May 2021. I may consider buying the stock for the dividend, 3.58% yearly, if the stock drops below $150. Company strengths. Whirlpool is the world's largest American manufacturer of home appliances in nearly every country around the world. Its main products are laundry appliances, refrigerators and freezers, cooking appliances, dishwashers, mixers, and other portable household appliances. For 2022, Whirlpool sees 55% of total sales coming from replacements of major appliances, and rest from home remodeling or new homes completed. EMEA and North America are benefiting from the work-at-home trend and the strong housing market. Asia and Latin America are beginning to grow faster. The company has pricing power for premium models that are in high demand. Whirlpool has a strong balance sheet and ample liquidity to endure any economic scenario, including a severe recession. Whirlpool's return on equity of 37% is amongst the best returns of the industry. Its return on assets of 9% is better than the industry average of 7.5%. The profit margin of 8% is in line with the rest of the industry. Risks. Supply shortages in semiconductors, steel, and resins that limit production. The company's financial outlook is mostly dependent on supply availability to match strong demand. Competition in the major home appliance industry is intense, including competitors such as Bosch, Siemens, Electrolux, LG, and Samsung, many of which are expanding beyond their existing manufacturing footprint. Home appliances is a very cyclical business. Lower consumer spending on big-ticket appliances, and global recession. Whirlpool is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow only by 3 to 5% yearly. The earnings per share will grow only by 2 to 3% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.